For many of us, it was certainly a good day in the market today, despite relatively flat indexes. The Dow was just slightly down. The other two, not the small caps, the other two big ones, slightly up. Small caps were up pretty significantly. So some of us might have had varying performances based on how we're positioned, but over here we're positioned pretty well. But there's something that I've been thinking about, interest rates, that I've been talking about for a very long time, expecting them to rise. But today's turnout at the auction is not necessarily indicating that. So I do expect them to rise in the long run, but the foreign and other bidder demand at the auction today is indicating that, at least for now, there isn't reason for, but bidders to demand a higher interest rate. It's not looking like that. It looks to me like the United States economy and certainty in the government to some extent has remained relatively strong. And relative to other foreign governments, seems like a relatively good place for people to park cash versus having cash in the bank, paying nothing. And it is possible maybe the inflation expectations have gotten out of hand. Yes, I think there will certainly be some increase to inflation, and this will take months to take effect. Has already started to take effect, and there's still more effects to come as wage pressures go up, prices of goods go up. It all seems like the cards are there, but it's not like the forces are going to continue. In Venezuela, Germany, instances like this, the forces continued for years and years and years. And here we're only seeing it for a little bit. So I'm not willing to say that the effects are going to be transitory. I do think that wage pressures will rise and they won't come back down. I do think some goods will rise and they won't come back down until technology makes them come down, until this kind of thing happens. All of a sudden there's, AI, better machinery, et cetera, et cetera, et cetera. Technology makes them come down. And there'll be, a rise in the price level that remains. But will it continue remaining? Will there be a continuous rate of increase every year of some 4 to 5%? Maybe not. It might just be 1 year. That seems like the most practical outcome. I'm not willing to say that it won't happen yet. But I'm not willing to say that it's going to go right back down. I don't think that's the case either. I have yet to hear a really compelling case for that has changed my position, I hear rising wage pressure as fundamental. It's very clear that's happening. That seems to be the last step in structural inflation. And rising commodity prices, rising price level. And, I think there's still more time for it to fully come out. We'll see what happens. We will see what happens. It's something that we're going to, only be able to know with certainty with time. So, anyways, I'm not, leaving the gold trade, not leaving the Bitcoin trade, although I have probably done my full re-entering of that at about just over 2% allocation. I had sold a little while ago, had some concerns. Still like the fundamental premise of finite currency given this current context. And I have re-entered at lower valuations. If it sells off significantly, I will nibble again on the way down. But I'm only going to buy more if it goes down more. For now, if I happen to get $100,000, I'll buy a little bit more. But given what I have right now, that's all I'm doing. So still liking energy the way I see it. Prices are high. And if producers wanted to pick up the production, they could have or would have by now. So as the economy reopens, I expect the production or the consumption to increase and prices to rise. And when prices rise, it's possible producers produce more, but I still think consumption will be higher if that is to happen. Again, I don't know with certainty. We will see what happens. consumption will rise. Prices might fall back to around where they are now because they aren't raising production now. So that means they don't want lower prices. And earnings and revenues will expand and grow. So I only see the energy picture getting better from here. Obviously there's the long-term concerns, but we heard the Exxon president today, and there's been all this talk about the board, and there's been talk about our plans, but he didn't even mention the deal with Porsche on this low and zero carbon fuel. I would highly suggest reading up on that. That is a very interesting product and opens the door to even more powerful fuels. Like, can you get more power to a horsepower with a different fuel, or engine with a different fuel? I don't know, but they're partnering with Porsche and opens the door to different fuels. Synthetic. We already use synthetic oil, synthetic coolant. Why not synthetic fuel? Why does it have to come out of the ground? So we will see what happens. It's a rather interesting situation going on right now in the energy space. I would stick to good names that are focusing on stuff like this. I particularly like Exxon. Big fan of Exxon. It's my favorite company. Largest personal position right now. Largest client position right now. So we will see what happens. And until next time, peace out. One more thing. Growth stocks, if interest rates are falling, they might catch a little bit of a bid. But a run in growth stocks is not going to change, or even the expectation of a run in growth stocks is not going to change our premise that we look for companies we expect to 5 and 10x and that are priced very well. If you don't, I would not buy an expensive growth stock right now. I would buy something that you perceive as being able to take a massive impact on the future, and it's not having that impact right now, but has the potential for that ridiculous growth way over the rate of inflation, and then buy and hold that regardless of what happens. I read Social Capital's letter today, and the stock price might fluctuate, but I do believe with their fundamental analysis, which is that if a company can grow and focuses on growth, and they can grow, way faster than the rate of inflation, they will still be a good stock in the long run. Sure, interest rates might throw them around a little bit, but we'll see what happens. We'll just ride the wave. That's why you got to like the technology. So until next time, peace out.